What's going on YouTube? My name is GT, and if you're new to this channel, we provide meaningful information around fitness and finances through interesting conversations like the one we're going to have today. And let me tell you, today is going to be a very interesting conversation because I do believe we are indeed in the final countdown of the United States stock market. I'm telling you now, you're going to want to see this video all the way to the end, and I would encourage you to save and bookmark this video and be able to use it as a reference later on this year, because I think where this thing is heading long term is ultimately to an ultimate crash, but not yet. And that's what this video is all about. It's all about understanding where this market is going next, what are the indicators we are seeing, and then ultimately, how do we address this? And then how do we prepare for what's imminently and ultimately going to end up happening with this market? So let's talk about some of the details. Obviously, I threw a video last, and it'll leave the video up here about the stock market crash, what we are seeing, what are the cracks in the economy and in the United States stock market that's giving us indicators that this thing is heading to a crash. We also gave a key stock for the second time of one we're jumping into, and if you did see that, be sure to like this video and comment below what was the stock we indicated and if you jumped in. I'm telling you now, you are not going to want to miss that stock, because regardless of what's going to happen with the stock market, that particular company, although it's not financial advice, I believe that that particular company is going to be able to withstand the stock market and keep rising when the stock market is crashing. So that's going to be what you call a safe haven, as they say in the stock market. But in this particular video, we've seen that the market since that video has continued to come down, and it almost seems as if a lot of people are selling off. We've seen the CEO of Palantir, which was a company we alerted in our financial community weeks ago, that when it got all the way up to as high as $124, we alerted people left and right. Sell out of the position, get out of your positions if you're in there, take your profits, or as we did, be prepared to short the stock. And sure enough, we rode Palantir all the way down from $124 all the way down to what it is today, $88. That was a big bag printed, and there is clearly money to be made upwards or downwards in the stock market. So we're seeing now cracks, and a lot of these companies are not holding up, and they're getting obliterated during their earnings. And you may be asking, why is that happening? Allow me to explain this to you through an analogy. Imagine you have this very, very, very beautiful painting that you have a collectible, brand new collectible artwork, and you did some upgrades to it. You got it buffed. You laminated it, you got it covered, crystallized, whatever the case may be. And so you have increased the value up to its all the way to its maximum value that you can potentially get. However, when someone comes to observe it, you've done all these things, increase the value, but then when someone looks at it, they notice that in the bottom left corner, there's a little scratch on the painting. What happens to the value of that painting immediately? All the value gets tanked, and everything you've done to build up the value is no longer justified because of the one small blemish that was on the painting. It's the same thing that's happening with the stock market because of how elevated we are with the price levels. See, everything right now is being priced to perfection, meaning it's best case scenario for all these stocks because a lot of them are overvalued, overpriced. So if there's any sort of crack indicated in their earnings based off of their reporting or what they call forward guidance, basically what they are anticipating is to come for the company in the coming quarters, if there's any little crack or any blemish on anything on the reported earnings, they are now hammering the stock, shorting it, selling out, and saying we're done. Why? Because this economy is clearly getting ready to crash. And so now we have a very interesting earnings coming up tomorrow, or actually Wednesday, February 26th, which is NVIDIA. NVIDIA, historically, over the last few years, has been the one stock that has continued to elevate the market despite the market wanting to crack, wanting to fall. NVIDIA, after the earnings, continues to meet, beat, and exceed expectations, and it rises the market with hope that the good times will keep rolling. But this particular time, air is showing that potentially, maybe this time, we are finally going to see the blemish on NVIDIA that's going to officially start the party in the stock market crashing. However, I am going to show you one chart that tells me that I don't believe, although it's not financial advice, that this particular party is over, and it is not NVIDIA. Follow me into the chart and allow me to explain to you what I'm seeing, how I'm interpreting this, and what you should ultimately be doing with your investments as soon as possible to get ready. Let's check it out. Okay, so we have here the Apple chart. Very, very interesting chart here, okay? Apple historically, before a few years ago when NVIDIA started taking over, Apple used to be the north, if you will, of the US stock market. As Apple went, the market went. And even though NVIDIA and AI has taken over the stock market in recent years, Apple still tends to be the one company that everyone is following to show if the market is heading upwards or downwards. There are times where the market will all be green, but Apple will be one of the big companies that would be in the red when the whole market is green. And it's usually an indicator that something's coming in the horizon that's going to crash the market. And sure enough, within the next few days, the market tanks and it followed Apple down. In the same way, when the market is going down, at times, Apple is actually green, as it is of today, Monday, February 24, where the market was crashing, falling, everything, all of your favorite companies down in the dumps. But Apple, for one reason or another, was still green. Matter of fact, in this section here that we have circled, the last 8 of 9 trading days, each of these green candles represents one trading day. 8 out of the last 9 trading days have been green, which means Apple right now is moving on momentum while the market is showing down. And we talked about this in the last video, and there is a term where one thing is going one particular direction while the other thing, it may be going in a totally opposite direction. And if you remember the term we used, put it in the comments below so I can know you are catching on to this financial literacy. Now, with that being said, I see here that Apple also has done something very interesting today, Monday, February 24. Apple closed above the last price point where the market was shorted, which was on January 31st. It closed, it actually got up as high as $246, just about $247. But Apple today closed above that line where it's shorted at $247.10. So what we want to see is one more day of follow through from Apple upward, meaning you want to see Apple close above $247 on Tuesday, February 25th. And if it does, that could be an indicator that Apple is going to be heading upwards. And if so, could be an indicator that the market is getting ready to reverse, which is exactly what we are anticipating. Now, as the market reverses, I believe the S&P 500, which currently is battling at the line of $600, will actually also reverse one more time before we see the ultimate crash. And in our estimation, if it does make a reversal at these levels, we see that the S&P 500, the SPY, ticker symbol SPY, can get up to as high as between $620 and $625. Now, mind you, if it gets to those levels, and if we happen to be right on our estimation that this is the end of the road or the final countdown, as we said in the beginning of the video, then you are going to have to program in your mind that as good and as fun as the market is at that moment, that you need to be proceeding and seeking an exit door as soon as possible. One thing I would encourage everyone to do as we're closing down this video is that if you have a 401k, I would encourage you, if you have not done so anytime recently, I would check your 401k balances. I would see exactly what you're currently being invested into. And if you don't self-fund or self-direct your own 401k, meaning you don't manage the investments you put into your 401k, which companies you're investing into and which stocks you're in, and you're doing it through the fund manager through your job, I would immediately encourage you to give a call to your fund manager as soon as possible to understand a little bit. What is it that they're investing into? Ultimately, ask them, why are you investing into this? And ultimately, if you are following what we're doing here on this page, although we are not your financial advisors, however, we are making sound financial decisions based off of investment opportunities that we're doing and making significant money off of, then I would encourage you then to direct your fund manager to either A, potentially move a little bit to the side, moving money more onto some sort of a bond or a yield onto the side, or maybe see if there's a way for you to be able to move it into some sort of money market fund or something so that you're not putting most of your money at risk. Because what's going to eventually happen with everyone's 401ks, which is what happened in the 2008 crisis when everybody lost a lot of money, lost their jobs, lost their retirements, essentially lost their futures, the money that was in the market that you're putting your hard-earned 401k dollars into, that's the money that gets shorted later when the market crashes. Because what's going to happen later is again, when the market is going down, it's a bull market the other way, and it's a shorting of the market. So the money that people are investing into is getting shorted. And so you're losing your money, and the person shorting the market is scooping up the money that you're making. Remember, the stock market is a net zero game. You only make money while somebody else is losing money. And so I would encourage you, as we're going into this year, although it's not right now, and I don't believe the market is going to crash right now, but I do believe we are approaching the end of this road. And if you don't want to reset and go further back in your 401k, and depending on the age you are, you may not be at a position where you are ready and capable and able to take a whacking off of your 401k, then you need to plan accordingly and prepare to protect your gains so that you're not losing money. If you like videos like this, please be sure to like this video, share this with somebody you know, bookmark this, put a notification bell, put a smoke signal on this video if you need to, and be prepared for what's to come. I don't think the crash is coming yet. There is one more leg up, in my opinion, and we believe there will still be more money to be made. We also gave you a stock in the previous video for you to look at to continue to invest into that we do believe will transcend long term. But ultimately, this market will eventually crash. And when it does, a lot of people are not going to be prepared, similar like they weren't in 2008. So let's get ready. Let's protect our futures. Let's protect the gains that we've done working as hard as we have along the way. We don't want to go backwards. Our family can't afford us to go backwards, and we won't on this channel as long as we stay together. We'll talk to you on the next one.